Hey there and good afternoon everyone. This is Trader Tim from eMiniMind.com. Today is Monday, April 2nd, 2018, and kicking off the month and the week with another pretty substantial move to the downside. But I'm not super concerned at this point that we're going to go into a free fall sell-off. So I'll talk through and walk you through a few reasons why I don't think that's necessarily going to be the case. If we start with our daily ES chart, we can see the major swing low that we put in back in February, and that low is a 30 and a quarter, 25, 30 and a quarter. Now today's low, you can see how we traded up to the next 50% retracement short on the daily, just from this little kind of 1 day swing high, if you will. And today, trading down to the negative 23% target of that short. Now we could draw the next retracement from highs down to lows. That puts us at a 26.14. So tomorrow, Tuesday, if we do get a bounce, I'd be looking for a short play somewhere around 26.14, or at least looking for the market to stall out a little bit. If we go lower, it wouldn't be a big surprise. The negative 60.18 is at 24.88. If I back up a little bit, we can see that is below this February low. Now, one of the reasons I'm not overly concerned with the market falling, the bottom falling out. Yes, we've got these, U.S. trade, potential trade wars, and a lot of dialogue and speculation going on. But if we come over to the S&P, and let's first take a look at the four top line figures, if you will. The S&P, we can see the today's low as it relates to the swing low back here. If we go to the Dow, we can see that low on the Dow, more of a double bottom here compared to the S&P. If we go to the NASDAQ, we can see a little more strength. Didn't come down quite as far. And then lastly, the Russell, kind of the strongest of the four. So the Dow should be the first one to break it, at least at a significant point if we do break this swing low tomorrow. And if we do, I'd be looking for another one of these, days to form where we have a big down day, the media frenzy, and then the market rallies into the close. If we take a look at the VIX volatility index, look at what we did today. We did not break the swing high from the 23rd. And so we need that break, that corresponding decline in the S&P on the 23rd is up here, is this candle back here. So the S&P broke that swing low, but the VIX did not break its corresponding swing high. So that's telling me that there's you don't have that confirmation of added sustained fear or uncertainty. So until the VIX breaks that low, breaks its high from the 23rd, which basically needs to break a 26 and stay above it, then the longs are in play. Now, if we go back to 2014, 2015, and we zoom in to the chart here, well, we get a very similar picture to what we have right now. So we can see the 2014, very strong, nice trending market. Then we start to flatten out. We get this dip, this major correction at the end of 2015 here. Let me go actually to the daily chart is a little bit clearer. So we have the nice move higher, and then in 2015 we start to kind of move sideways, and then we get this big correction. Well, with that correction, the market bounced. It broke the short, meaning it failed the short. We pierced the 61.8, and then the market rolled over, put in a higher low. We traded up, made this double top, rolled over again, kind of retested this low. This low being that major swing low we were talking about in February of 2018, sort of the corresponding relationship, and then put in this double bottom, more of a triple bottom here in the beginning of 2016, and then that's kind of what got the momentum going, and we've really been in since 2016. So here's the uptrend 2017. If we come over, we can see, a little bit different situation where the market sort of went straight up as opposed to flattening off, but the result was essentially the same. We had this bigger correction. The market bounced. We broke the 61.8 of the short, but then the market still rolled back over. And now we're in a situation where we've come down close to this swing low. And so whether we get a bounce and double top and then retest it again, or whether we just start selling off here, break this swing low, and then get some buying that comes in, there should be a good amount of push and pull from the bulls and the bears. So even if the market breaks this swing low, I would look for buyers to be stepping in at those lower levels. If we go out to a weekly chart, you can kind of see the triangle formation. Very large triangle formation up here on the weekly. So the uptrend still intact, even if we've been in a shorter, more recent downward momentum. The uptrend is still intact. We've got some big round numbers below us, 2,500. If we were to break the swing low, 2,500 is not very far below us. And so I would just caution you that if the market does sell off this week and we break the swing low from back here on the 9th of February, watch for that intraday V reversal where we go straight down and turn around and go straight back up. You may get a corresponding low ticket lows, and if you do, it's definitely one to buy. But I also wouldn't be surprised if today ends up being a low, and at least a short-term low, and we get some sort of bounce that takes us back up towards the 2,800 level. Do I think we'll go straight up into new highs? Nah, maybe, but there's definitely going to be some timidness or hesitation by people who'd be wanting to buy and chase the market up at new highs. Eventually, those people will return, but this straight up move is still pretty fresh in a lot of people's minds, and this move was really fueled by chasers and people who were not privy to market movement. And so all of a sudden you start hearing about such a strong market, and those sitting on the sidelines start to jump in and really take the market parabolic, and then they kind of lose their shirt in the correction here. And so now they're sitting on the sidelines with less money than they had just a couple of months ago or at the end of 2017. And so when the market does start to rally, they'll be a little bit more hesitant to get back in. We also have the longer term investors who are maybe a little bit smarter, and they're also kind of not so eager to go full steam and push this market up. If we look at some individual stocks, Apple, its 6-month trend very horizontal. Amazon looking a little bit better, but we have had some bigger declines on bigger volume these last few days. Google, also just like Apple, very horizontal. Microsoft looking okay, but still, some big down days on heavier volume. So Netflix is another one that I like to look at. Um, the trends are kind of a little messy, and people who might have those stocks in their portfolio, or they're kind of following along with the market, or folks that would be putting money into the market via the institutions, the bigger banks that are placing orders for clients, and they're putting on, you know, thousands of contracts at a time. That money is sort of slowed at this point just because of the constant, what it seems like constant uncertainty of what news is going to hit the market today. It's no longer just looking at the economic calendar and saying, okay, we got an employment number, we've got a GDP report coming out, new homes. It's some of this, what are we gonna wake up to tomorrow sort of sentiment. So that too shall pass, and the markets will return to a very tight-knit trending environment, but it likely won't be anytime in the very short term. So we've seen about a solid 3 months, all of February, March, so maybe 2.5 months as we, ended the uptrend, if we will, and moved more into the sideways, more volatile market condition. So it could easily be another couple of months of this. But if just go back to that 2015, 2016 sideways movement, the uptrend did resume, and we had another couple of years of very strong growth. And just like in the 90s as well, the markets just continued to chug along. So even though we've got this correction, if we go back to 2015, we can see the two sort of U formations and a lot of sideways action. But over the course of a year, not really a huge pull on the market's overall trend. If we're talking from 2010, 2011 lows, if we go to a 10-year chart, talking back here, '09, the low. Overall, the uptrend still intact. So a couple of monthly red candles, which we haven't seen in quite a long time, but on the bigger scheme of things here, we've had similar situations within this, 8, 9, 10 years of uptrend, and the signs are not pointing to the bottom falling out and the market dropping a substantial amount. But we know that anything can happen, so always good to have a couple scenarios in your mind. So going into the week, we could either move higher towards the 2800 level, we can move lower and break the swing low, but if we do, watch for that bounce, watch for that reaction and buyers to step back in. So that's it. Going to be doing a live trading session tomorrow morning. You can check that out at emoneymind.com/VIP. Also doing a webinar in the afternoon talking about the top 3 tools that I use to day trade the futures markets. And the link to that is over at emoneymind.com. Thanks and have a great week. We'll talk to you soon.